court, you have to repeat the same number to eternity. If they're on a public holiday. Market closed. Market closed. Market closed.
Let's go, baby.
2 minutes. 1 minute.
Good morning and welcome to Saxo Bank's live market call. Today it's Wednesday, 30th of January. Let's begin our presentation with the overnight news bullets. Yesterday actually witnessed a release of number of very important figures with the U.S. durable goods order for the month of January, or rather December, being the most important of all. And somewhat surprisingly, the figure was 5.2%. Versus 1.6% expected. Not only was it a positive release or positive surprise in the sense that it was triple the figure that the markets expected, but it was also a positive figure in the sense that it was the first growth figure from U.S. in 5 months. So indeed signaling somewhat of a robust durable goods order circumstances in the U.S. The figure was, or rather owed itself primarily to a spike in the airplane goods orders around the end of the year 2007. We also had U.S. consumer confidence for the month of January, marginally above the expectations, coming at index value 87.9, while the expectations were 87.0. We also had Kiwi building permits for the month of December coming out at a pretty bad minus 5.2%, while the expectations were unchanged at 0%. So in the marketplace, the dollar is well offered ahead of FOMC rate decision. Euro dollar is now already at 147.75 and it can be expected to push up to 148 later today. But the broad yen strength at the same time still prevails. We have dollar yen well offered and in the Asian session already at 106.60. On the equity side, the American indices yesterday posted somewhat modest gains. The Dow Jones ended the day with 0.78% profits. But this was not echoed in the Asian session where we had broad losses. Hang Seng was down by about 2.25% and the Nikkei lost 1%, basically relinquishing its gains from the previous trading session. On the fixed income side, as can be expected, treasuries are pretty well bid. They're higher basically on rate cut speculation. JGPs likewise have resumed their uptrend, and basically this is on falling Japanese equities. And finally, the bonds were flat this morning, but volatile trading in bonds can also be expected later in the European session. And on the commodity side, the crude is now higher for a 5th consecutive day, with March contract now trading around $92.15 a barrel, and the precious metals are consolidating after yesterday's substantial gains. Both spot gold as well as spot platinum were trading at all-time highs yesterday. The spot gold has now consolidated to about $923 an ounce, and spot silver is at $16.66. Today's calendar is very, very heavy. It is not only the FOMC rate decision, but it is release of other key figures. The FOMC rate decision is expected at 19:15 GMT, but before this, already at 13:15 GMT, we have the US ADP employment change for the month of January, as well as GDP annualized 15 minutes after this. At the same time with GDP, we will have personal consumption, as well as the GDP price index and core PCE figures being released. So number of very important figures from the US, and most importantly, the GDP figures will be closely examined to establish whether the speculation on US already being in recession has any validity to it. The upcoming sessions tomorrow, we have German retail sales as well as unemployment rate at the beginning of the European session. Later in the afternoon, we have the Canadian GDP as well as a string of US figures. On 1st of February, we have the unemployment rate, ISM manufacturing as well as ISM prices paid. And finally, University of Michigan confidence index figures. This is on 1st of February. So what's going on in the marketplace? Obviously, the most watched, the most talked item, the most speculated item of today is the Federal Reserve's FOMC rate decision. The expectations at this point are, well, not unanimous, but they strongly favor a 50 basis point cut. The current benchmark rate in the US is 3.50, so the expectations are that this would be slashed to 3%. Both Bloomberg survey of analysts as well as the Federal Fund futures implied probability now show that the market consensus is indeed for a 50 basis point cut. UBS earlier today in an email, UBS, which actually happens to be the Europe's largest bank by assets, stated that it would report a Q4 net loss of 12.5 billion Swiss francs and a net full-year loss for 2007 in the amount of 4.4 billion Swiss francs. So this news, coupling with the largest French bank, BNP Paribas' announcement that its Q4 profits suffered a 42% drop in comparison to Q4 in 2006, sort of are giving us growing signs that the credit problems that have plagued the US and UK banks are now starting to take root also in continental European banks. Our FX strategy of today is in cable. We basically believe that dollar will be well offered ahead of the Fed rate decision. So we are buying into cable with an order at 1.9918 bid. Our target is 199.75, and we are keeping a tight stop loss at 1.9895 offered. On the equity side, we basically recommend the same trading strategy as yesterday. This was a breakout play on both sides for DAX. Just to repeat, we are buying the break of 70.10 if bid on the upside with a stop at 90.69.50, with a target at 7200. And on the downside, we are still selling the key support level at 66.60 if offered, with a stop at 6700 and a target of 60.30 and 50. Finally, our recommended future trade of the day is in crude oil. This is the March contract. We believe that the bullish trend looks to continue. We have the DOE inventory figures being released today, and we will look for the crude prices or for the inventory figures to have been built to about 2,000 barrels on oil, and the recommendation is to buy the March contract at $91.70 to $92 area with a stop below 91.50, and our target for the trade is $93 a barrel. That is it for me today. Thank you very much for joining us. See you again tomorrow. Bye-bye.